Welcome to the Oakley Podcast, Trucking, Business, and Family. This show is brought to you by Oakley Trucking, headquartered in North Little Rock, Arkansas. The purpose of this podcast is to communicate with Oakley owner-operators and their families by giving them up-to-date information concerning Oakley trucking and the trucking industry, from business advice to safety updates to success stories. Also to give an insight to outside truck drivers that might be interested in joining the Oakley family. Hi, I'm Jeremy Kellett, Director of Recruiting here at Oakley Trucking, and I'm your host for this podcast. This is episode 11. On today's podcast, we're going to be talking to Jeff Amon and Michael Schneider, both with ATBS. Jeff Amon is co-owner of American Truck Business Services, ATBS, the largest business services provider in the country for truck drivers. He's been with the company since 2001 and is involved in all aspects of ATBS, helping to set the strategic direction of the company. He continues to be a leader in the sales and marketing of the company's products and services. And Jeff graduated from Colorado State University. Also joining him is Michael Schneider, which has been at ATBS for 11 years and runs the tax department. Michael's team files around 20,000 tax returns for ATBS clients each year. So got these two guys going to join us here in just a second, and want to first thank everybody for listening to our podcast. This has been a great deal for recruiting and talking to our owner-operators at Oakley Trucking. It's a great platform to be able to communicate with you. We want to try to get some good information out to you the best we can. That's important to you. So this is why we're doing this podcast. Share it with a friend, tell everybody, especially the Oakley owner-operators, so we can communicate with you better, and this is what we're going to do in the future. This comes on, a new one comes out every Wednesday morning, so be looking for it and help spread the word. Hey, gentlemen, are you there with me, Jeff and Mike?
We are, Jeremy. Glad to be with you.
Hey, glad to have you guys. I really appreciate you taking time out of your busy schedule to answer some of these questions. So what we did is we asked our owner-operators if they had some particular questions for ATBS. Of course, you remember, Jeff, Todd came on here in the beginning, one of our early episodes, and explained at that time it was the PPP was just coming out, the relief money. And we learned a little bit from him on that. And so this is kind of a little follow-up episode of that. Plus, when we talked to him, we never did get to any of the questions that our owner-operators wanted answered. So we've got some new ones. And after you give us a little update on the PPP money, let's dive off into these questions. Is that good?
Sounds great, man. I can start out giving you just a brief update, I guess, on PPP, like you said. And I don't know, you were just talking, it dawned on me, I'm not sure I've ever really shared why ATBS even exists. And I'll try and tell what's a really long story very quickly. So my two brothers and I own ATBS, and the three of us started in trucking when we were 12 years old. We were diesel mechanics, and we've been in trucking our entire lives. I'm in my mid-50s now. So I've been in trucking from diesel mechanic, driving trucks, working on docks, doing everything you possibly do in the industry. When we got out of college, I'm the oldest. When we got out of college, the three of us had some trucking companies, and we ran those for a few years. And one day we came to work, and we sat down in a conference room, my two brothers and I, and we looked across the table at each other, and we said, this trucking company sucks. We hate our people, and our people hate us, and it's no fun coming to work. And it's kind of startling. And when I tell the story, people look at us like, what kind of jerks were you running a business that all of your people hated you and you hated them? How does a company get to that point? And the conclusion we came to was that as a trucking company, we had an LTL company with about 150 trucks. We had a truckload and logistics business with about 600 trucks. We were a refrigerated carrier in the truckload business, and our drivers were all employees. And in trucking, especially, unless even huge companies like the Swifts and the Schneiders that have 15,000 plus trucks, they don't set the rates. The market sets the rates in trucking. And so if the market sets the rates and you can't generate more top line revenue to make money, the only way you can make more money is by cutting costs. And every owner is trying to figure out how to make more money in their business. And like I said, if the only way you make money is to cut costs because you can't charge higher rates than anybody else does, well, your biggest cost in trucking is labor. And so anytime we wanted to make more money, it meant we had to figure out how to force our people to work harder and how to pay them less for the work they were doing, because the more they worked and the less we paid them, the more money we made. So it was a win-lose, right? For us to make more money, all of our people had a poor quality of life and made less money. And so that's the conclusion we came to, is the reason we hated the people who worked for us and they hated us and we hated coming to work was that win-lose culture. And so we said, how are we going to change the culture? And for us, the light bulb went on. We said the way we change the culture is we convert to owner-operators, because owner-operators are just the opposite of company drivers. With owner-operators, the more money an owner-operator makes, the more money the company makes. And so you go from this win-lose of beating your people down to a win-win. How do we help our owner-operators be more successful? Because the more successful they are, the more successful we'll be. And it was unbelievable. We converted, at that point, we had about 400 trucks. We converted, they were all company drivers. We converted them all to owner operators. We gave them our trucks at our cost. We gave them our fuel at our cost, our maintenance, our insurance, everything at our cost. And company drivers were just killing it because they're great truck drivers making a ton of cash flow. What we found is after the first year or so, a lot of them, they didn't understand how to file taxes. They didn't understand necessarily the difference between being an independent contractor and an employee. They didn't understand doing bookkeeping and keeping their books and all the different types of deductions available and all those things. And so we searched the country looking for somebody to help our owner-operators be more successful, and that option just wasn't out there. Nobody was doing it. And so in 97, Yellow Freight wanted to buy our LTL operation, and so we sold it, and we had an opportunity to sell our truckload and our logistics businesses in 98. And when we sold those companies, I ended up running the acquiring company. And my brother Todd, that you mentioned, was on your podcast immediately. I mean, the day we sold our trucking company, the next day, Todd started ATBS. And our whole focus or reason for being at ATBS is to help drivers be more successful, to make more money, and to pay less in taxes. I mean, it's for us, it became our way to give back to the industry. We love owner-operators. What we care about is owner-operators and helping them be successful. So, with that quick background, when the world changed with coronavirus, the PPP program came out as part of the CARES Act, and that was life-changing for so many of our clients. And so, like I said, I just told you probably a 2-hour story in about 2 minutes.
But it was great.
It comes around to
that's a great story because I never heard that. I guess, Jeff, as long as I've known you, I didn't really realize that the birth of ATBS. But that's a great story to start off this episode, because that way the people listening and the owner operators, they understand a little bit of history of ATBS. And I think that's just, especially that you were in the trucking business and started out as a diesel mechanic, and you. Ever since I've known you guys for a long time, y'all have always wanted to make the owner-operator bigger and better. You wanted to help them somehow. And just like you just said, keep as much money as they can of the money they're making to keep it. So I think that's great. I appreciate that introduction of ATBS. You did a great job.
Thanks. Like I said, I told it quick, and it probably was a little disjointed and rambling through it off the top of my head. But that is the birth of ATBS and our reason for being. And so, I mean, we're all about owner operators. And, one thing we're pretty proud of is when people outside of trucking companies when they survey drivers, owner operators in trucking, our ATBS clients average 40% higher net income than owner operators that don't use ATBS. And there's some reasons for that. But we're pretty proud of that statistic. And then also, in terms of taxes, our clients pay on average $3,000 to $5,000 less in taxes than clients that don't use ATBS when people survey the industry. So, those are things we're pretty proud of. And like I said, when the CARES Act came out, and especially the Paycheck Protection Program, most people refer to it now as PPP or P3 or 3P, something along those lines. It was life changing because the world changed, and for a brief period of time, trucking did really well. There was a lot of demand, but things slowed down, and a lot of guys needed more money, needed help to keep their businesses going. And so Todd, Matt, and I sat down at the initial stages of hearing that something like PPP might come out, and we said, what would it cost us to do PPP loan application packages for our clients? And, just if, in a perfect world, if everything went exactly as we hoped it would cost us about $200 to do a loan package for a client. And we said, hey, part of our giving back to the industry and to owner-operators in particular, we're going to do this for free. We're going to lose money on it, and we're going to eat that $200, and we're going to do it free for all of our clients. And then we said, if anybody signs up for ATBS, we'll do it for free for them too. Even though they haven't been an existing client, we'll still do loan packages for free for them. And it's turned out, our initial estimates, it's not a perfect world. Our initial estimate of $200 has turned into a reality of a little over $500 for us to do loan packages for our clients. But like I said, we made the decision early on. We've stuck to it. We do it for free, and the results have just been unbelievable. We've successfully helped our clients get several $1 million of PPP funds, which is just awesome. In fact, I just glanced a little bit ago at our Oakley clients. So far, roughly 30% of our Oakley clients have applied for PPP funds with loan packages we provided to them. And we've successfully gotten several $100,000 for our Oakley clients. So we're pretty excited about that. Where I would go from that in terms of an update on PPP, that PPP 1, the first version that came out, was funded with $350 billion, and it was gone in 2 weeks. And in fact, the SBA statistics said they did 14 years worth of SBA loans in 14 days. And that $350 billion was gone. And, a lot of people were really upset. It was big companies getting the money, not small companies, not owner-operators, not the people that needed it. Fortunately, a lot of our clients, we were ahead of the curve, being prepared for it. And a lot of our clients were able to get money, but for the most part, most small businesses were not able to get money. So Congress went back at it. Democrats held it up for quite a while, but fortunately, Congress finally passed, and PPP2 came out. PPP2 was funded with $310 billion. Is that right,
Yeah.
Michael? $310 billion in PPP2. That was signed on April 27th, and everybody warned. Congress warned, SBA warned, everybody warned that PPP2, that new $310 billion, would again be gone in a matter of days. They thought it'd last less than a week. Well, the good news is it's been out there for almost a month now, and as of last week, there was still over $100 billion left available in PPP funds. So, what I would say, Jeremy, is, like I said, so far about 30% of our existing Oakley clients have reached out, and we've done PPP loan packages for them. I'd urge any Oakley owner-operator that's a client or that wants to sign up for services and have us do a free package for them. Like I said, we're eating a $500 cost. There's no charge to our clients to do this for them. We'll put the packages together, and you can still apply. Technically, the deadline is June 30th. Is that right, Michael?
Correct. Yep.
Technically, the deadline is June 30th to apply for a PPP fund, but like anything, I wouldn't procrastinate. I wouldn't put it off, because those funds could go away at any point. So I'd reach out sooner than later if you want us to apply.
And I don't, Jeff and Michael, I don't see any negative to it. I mean, if you're an independent contractor, especially with Oakley, which is our audience here, I would be trying to get a PPP loan, wouldn't you? What's the negative to it?
We don't see any negatives, Jeremy. I mean, the potential, the only negative is, for some reason, they did not forgive your loan, which means you have to pay it back. It's like a 1% interest rate. And we don't see that happening. I just throw that out there, that it's technically called a loan, but PPP loans have forgiveness, and they'll forgive the entire PPP loan if the money is used properly. The forgiveness application, the guidance initially came out a week ago. We've been through it, and even though the original version came out, Michael and I talked about this morning, it's still going through revisions. For example, the original PPP guidance was that from the day you receive funding, you have 8 weeks to spend that money on essentially payroll for your business, and you need to spend it in 8 weeks. Well, as you know, many states have various forms of stay-at-home orders, and people who receive PPP money weren't even legally allowed to open their businesses because the states had stay-at-home orders. They couldn't spend it in 8 weeks because they weren't allowed to even be open to spend the money. So, again, are thinking about extending the 8 weeks to maybe 24 weeks or 36 weeks. All this is still being debated and revisions are being made. I can tell you, probably the single biggest thing is, in the current form, they say that payroll over around for an owner, which just about every owner-operator that gets PPP funds is the owner of his business by the nature of being an owner-operator. They say that an owner cannot take funds, paycheck funds personally for over $15,300 and something dollars, like $381 or something. Anything over that needs to be paid back, and we do have some Oakley clients that have gotten $20,000, a little over $20,000 is the maximum you could get. We do have some Oakley clients that have gotten that $20,000, so potentially $4,000 to $5,000 of that may need to be paid back, but we're working diligently to find ways to get all of that money forgiven, and we're running test cases right now with various banks to see if we can get it forgiven. We feel pretty good that we're going to be able to get 100% of it forgiven. So to your question, Jeremy, we don't think there's any downside whatsoever. It's for all practical purposes, this is free money to help your business survive until the economy is reopened and things are back to normal. And there's really no reason in my mind not to go after it. There were questions. You've seen stories about companies that got money that probably shouldn't have, companies like Shake Shack, some universities, maybe,
right.
I think Ruth's Chris Steakhouse. There's been companies that got money that shouldn't have gotten the money and that they're being required to pay it back. And so the SBA and the government are now certifying that people got the money legally, should have been entitled to the money. The good news for our clients is they basically came out with a ruling or guidance that said if you borrowed less through PPP, if you got less than $2 million, you were essentially self-certified. If the bank certified you, which all of our Oakley clients, the bank did certify them. If the bank certified you, the government's not going to come in and reinvestigate and try to recertify you. So there's no risk that the funds you got will have to be paid back because they weren't certified properly, and we think 100% of the funds are going to be forgiven, so that this is truly free money for the owner-operator to keep their business going until the economy gets back on track.
Okay. All right, we're talking to Jeff Amon, co-owner of American Truck Business Services, ATBS, and also Michael Schneider. He is the tax expert there. And let's start with a couple of questions here from our owner-operators that had sent in a few questions, and let's start with this first one, and it says, I'm using TurboTax as a sole proprietor. I bought a new truck in 2019 and traded in the old truck, which I received money for, and applied it all to the new truck. I am being charged that amount as income. Is that a recent change? Any way around that?
Yeah, Jeremy, great question. And this is Michael. So what that client's probably referring to is what was called a like-kind exchange. And the Tax Cuts and Jobs Act changed that rule. So the short answer to the question is yes, that is supposed to be treated as income. And yes, that is a recent change. However, there is kind of a way around it. It's not, what I would call a loophole. It's fully legal, fully part of the tax code, always has been. So that part of it isn't really a recent change, but let me get into that. So after the Tax Cuts and Jobs Act passed, like-kind exchanges were removed from all property types except for real estate. And a like-kind exchange is simply swapping one type of asset for another like asset. So a tractor for a tractor, a trailer for a trailer, something like that. So they did do away with that, but what they did in the same token was they introduced accelerated depreciation or changes to accelerated depreciation. So that being, when you sell a truck or a trailer or any piece of equipment, generally what you're going to have is a gain. Let's say you received $25,000 for a tractor trade-in. Well, that $25,000 likely is going to be taxable to you as ordinary income. If you buy a new truck or invest that $25,000 into a new piece of equipment, what you're going to receive in exchange is a depreciation deduction. So you can play with that depreciation to essentially wash out your gain or wash out your income. So hopefully that makes sense. I know we're talking a lot of numbers here, but you can play with both sides of that coin to make it even split for you. One thing we do at ATBS is every case is individual, every case is specific based on its own merit. So we will look, when we prepare a tax return, we will look at depreciation and optimize that for the driver.
Okay.
I think that's an important comment, Michael. You know, a lot of tax people you go to, they'll grab however they treat this depreciation. They're going to do it the same for every single client in the firm. As Michael said, we look at each specific client's personal needs for cash flow, tax burden. You know, if you use up all your depreciation in a few short years, you've got years down the road where you've got no depreciation, you're just getting absolutely killed in taxes. We look at each scenario, figure out what the best method for depreciation and how much depreciation to take each year, but what's best for that particular client, and then and we discuss it with the client, what we're thinking, why we're thinking it. It's ultimately our client's decision, but we do it on a case by case basis. We don't apply a general rule to everybody.
Okay, good answer. Question number 2: any advice for first-time owner-operators on ways to save money? Oh, man, that could be a whole episode right there, couldn't it?
Yeah, that could be a year-long
yeah, it could.
Weekly episode. I'd say
Go to Oakley.
a few things. First, yeah, go to Oakley. Save money. Go to Oakley. Make more money. Save more money. When you say go to Oakley, you know, one thing that's interesting is we see a lot of carriers do have buying programs. A lot of owner-operators refuse to use them, and that's just insane. And the opportunity a carrier has for an owner-operator to save money, take advantage of that carrier's buying power. Mm-hmm. The next piece I'd say is for new owner-operators. A lot of times they don't realize, because most of them were company drivers before, their single biggest expense is fuel. And as a company driver, they just, you know, when we've converted our fleet from company drivers to owner-operators, one of my favorite things is, you know, a guy become an owner-operator, and 2 weeks into being an owner-operator, he'd come and he'd complain about tire wear, he'd complain about fuel economy. And I'd say, you son of a gun, I've been telling you for 4 years what to do to save me fuel costs, to save me tire wear, and you didn't give a darn about it. And now that you're an owner-operator, you care about it. That's what I love about owner-operators, because now they have a vested interest in the same things the carrier used to have a vested interest in. So, you know, fuel is the single biggest expense most owner-operators will have. And so as a general rule of thumb, something to remember is, you know, for every mile an hour you drive over 55 miles an hour, it's going to cost you 1/10 of a mile per gallon. And so, you know, if you're doing 65 instead of 55, you're going to get a mile per gallon less in fuel economy. And if you're doing 75 instead of 65, you're going to get a mile a gallon less in fuel economy. And that's a ton of money. It can be $10,000 or $15,000 at the end of the year out of your pocket. And the other thing that I try to explain to new owner-operators, and the way to think about it is, you know, an owner-operator runs on a profit margin, let's say about 50%. So for every dollar of revenue that you generate, maybe half of that will go in your pocket as profit, maybe less. But if you cut $1 of cost, 100% of that dollar goes in your pocket as your money, right? And so if you save $1, if you generate one more dollar of revenue, maybe you're putting 40 cents in your pocket. If you cut $1 of cost, like $1 less of fuel, 100% of that dollar is in your pocket. So it's far more important to control cost than it is to generate revenue. You've got to generate revenue, but controlling costs is going to put a whole lot more money in your pocket than generating revenue. Their second biggest expense is maintenance. And the biggest mistake I see a lot of new first-time owner-operators make is, as company drivers, the company, you know, figured out preventative maintenance PM schedules on trucks, and they told the driver what maintenance to do and when to do it. And when drivers become owner-operators, a lot of them don't understand preventive maintenance, when it is, what it is, when to schedule it. And so what happens, they end up driving the truck until it breaks, and then they get it repaired. If you're not doing preventive maintenance and you're waiting for things to break before you repair them, you know, first off, your mechanical expenses are going to be through the roof, because you never break down, you know, at home where you know the mechanic at the shop. If you break down on the road, they're going to charge you exorbitant amounts of money to get repaired. And on top of that, you've got, you know, hotel or other expenses while you're dealing with that downtime, and you're not generating revenue. With preventive maintenance, you can schedule your maintenance when you're taking time off, or whether it's vacation or holidays or whatever. You schedule the maintenance when you don't need to drive, as opposed to when you're on the road. racking up costs and losing revenue at the same time. So fuel and maintenance are the two biggies. The third thing I'd say is new owner operators. They hear all the time it's tax deductible, and so they just go on these spending sprees because everything I buy for my truck or my business is tax deductible. What I think a lot of new owner operators don't understand is what tax deductible means is that you're deducting that from the income that you're paying taxes on. So the average owner operator has a tax rate somewhere around 22 to 25% is what we see. So if we just use 25% as the average tax rate, what that means is that every dollar that you spend on something for your business, whether it's a part for the truck or whatever it may be, every dollar you spend on your business, when you deduct that dollar, it basically means you're saving 25% because that's a dollar you don't have to pay 25% taxes on, right? So the way to think about it is anything you buy, you're getting a 25% discount. So when you say I get to write it off, that doesn't mean you're writing off 100%. It means that you're saving 25% on anything you buy for the truck, if that makes sense. This is Jeff. The last thing I was going to say is if you're a client of ATBS, one thing that we do, I mentioned that our clients, when people survey the trucking industry and owner-operators, and our clients make 40% higher net income, probably the single biggest reason our clients make more money is that every month when we do their profit and loss statements, we benchmark them. We work in one way, shape, or form. We work with about 60,000 owner-operators in the country. When we do our profit and loss statements for our clients every month, we benchmark them against all the other owner-operators out there. And we literally, if they want a paper financial statement from us, profit and loss statement every month, we put happy and sad faces, where they're doing good, where they're spending too much money. If all of our clients have access to their P&Ls in their own private, personal, protected online portal where they can see, we highlight in red and green. Green, you're doing great in this area. Red, you need to make changes in that area. And it can be things, as an example, a lot of guys get in a truck and they buy their physical damage insurance. Well, they'll run for a year or two or three, and they don't get their truck reappraised. And a year or two down the road, they're paying the same rate for physical damage insurance as when they got the truck. And, the insurance company doesn't give a damn what you're paying price-wise for physical damage insurance. If you wreck that truck, they're going to reimburse you what the truck is worth. And so, the owner-operator needs to go out and get that truck appraised every 6 months, get a new value, and adjust their physical damage insurance. Well, with our benchmarking, whether it's fuel, whether it's maintenance, whether it's different types of insurance you're buying, all those things are highlighted. You could be doing great in an area for 5 or 6 months, and all of a sudden you went from, a green dot saying you're doing great here to a red dot saying, hey, we've got to make some changes in your business because there's ways you can save money here. So, those are the ways to stay in best practices and save money for first-time owner-operators and for all owner-operators for that matter.
Well, and I'd like to add to that, saving money, what a first-time owner-operator's got to look at is managing money. Now, I know fuel is big, like you said. Preventive maintenance is huge. And going with somebody like ATBS, which I would recommend, can sure manage your money, save you money on a lot of things, but having that discipline to manage that money that's coming in, because you're going from a company driver to an owner-operator, and you're going to start seeing a lot of dollars. There's going to be more money traveling through your account than you're used to, and it's real easy to see those big checks coming in and spend a little bit more, the lifestyle change a little bit. You got to be careful in that in the beginning. First time owner operator, I would keep living on what I was living on the best I could, the closest I could, until I got my business up and running, because you want to make sure you've got enough money in savings to handle any kind of disaster, any kind of pandemic, any kind of motor blown, anything like that. So managing your money at home, whether that's 2 or 3 different accounts, have them in, if you're like me, you got an account you can't touch, that type of deal, and you got a business account, to where you're managing that money, and it's not just a free-for-all that I'm making more money and now I'm going to go buy stuff. That I've seen too many owner-operators that have fallen into that trap, and I don't want that to happen to anybody. You need to be able to manage that money real good. So, okay, all good answers. Let's shoot, or somebody want to add to that?
This is Jeff. I'll just say one thing real quick because it's exactly what you're just saying. when in watching monitoring several hundred thousand owner operators through the years, we track causes of business failure in the industry as a whole. We have the largest database in the world on owner operators. And the number one reason for business failure for an owner operator is maintenance. Number two is health related issues. And number three is business and tax related issues, just not managing their business properly. And all of those you kind of hit on there. And so I think, back to that, just the one thing I'll really point out is in regards to maintenance. And if you don't know, call us and we can tell you. But for every truck out there, you've got a certain amount of money you're going to be spending on maintenance. Some it's going to be, trickled out a little bit at a time over the course of the year with small mechanical items. Somebody else may have a major mechanical go down on them, but we can tell you pretty much to the penny how much you should be setting aside. And maybe, in a brand new truck, maybe it's 6 cents a mile. In an older truck, maybe it's 15 cents a mile. But based on the truck you're in, we can tell you for every mile you run is how much you need to be setting aside in a maintenance reserve account so that you've got it, because you are going to incur those costs. It's just a matter of when you're going to incur them. Exactly what you're talking about, Jeremy.
Good input. Okay, number 3, is it better to run under an LLC or a sole proprietor, and what are the advantages of both?
This is Jeff, and I'll tell you, so we're a tax firm, and as such, we're not allowed to give legal advice, so this isn't ATBS advice, this is my personal advice. I own several businesses, and they're all LLCs, and the reason they are is because an LLC, in my mind, gives the same legal protection as a corporation does, meaning as a sole proprietor, if you get sued, they're coming after you and all of your personal assets as well as your business. With an LLC or a corporation, if you manage your business properly, they're coming after the assets of the corporation, but they can't come after you personally, after your home, after your spouse's income, after whatever you may have in terms of personal assets, farms, rental properties. They can't touch that stuff if you manage your LLC or your corporation properly. So from a legal perspective, and like I said, this is an ATBS, we're not allowed to give legal advice, but me personally, I like an LLC from the perspective of legal protection. From a tax perspective, I also like an LLC, and this is the reason. And first, let me say, if you are a sole proprietor, make sure you get your own employer identification number, EIN. A sole proprietor legally can run on their Social Security number. Don't do that. There's always attempts, especially back in the Obama days, but there's regular attempts to reclassify owner operators and turn them into employees. Much harder to do if you have an EIN instead of a Social Security number that you run your business on. The second, and to me the more important piece, and the reason I like LLCs, is because as an LLC, you have the choice you can elect whether you want to file your taxes as a sole proprietor or you want to file them as an S corp or as a corporation. And so what we find, and again, as ATBS for our clients, every year when we do their taxes, we look at if we could save them money filing as a corporation as opposed to filing as a sole proprietor. And at a point, typically it's somewhere around $65,000 a year of net income. At that point or higher, we can save money by filing a corporate return along with a personal return. I don't want to get too far in the weeds and spend 20 minutes explaining this, but filing as an S corp, you pay yourself payroll out of the corporation, you pay yourself a salary, and with that salary, it's a deduction on your business. You're paying less in FICA, in self-employment tax. You're paying FICA tax instead. Like I said, it's kind of a complex answer that we can get into maybe in a future podcast. But the big piece is, as an LLC, we can elect whether to file your taxes as sole proprietor or an S corp. And so when it comes time that we can save you money filing as an S corp, we'll tell you, and at that point you elect to be an S corp going forward, and we start doing your taxes as an S corp. So to me, that's the single biggest advantage of being an LLC, is that you get to elect how to file taxes, and we'll do it in the way that saves you the most money.
Well, and I think you hit it in the very first answer to that question, Jeff, was the liability part of it. They because we all don't think it's going to happen to us, but when a bad accident can happen to you and lawsuits come out of it, you don't want them. If there's any way you can keep them from coming and getting your personal stuff and your home and your spouse income and all that, then to me it's worth that. But I do understand the disclaimer there too, and you provide a service, and we get asked that all the time too. Hey, do we need to incorporate LLC? And we're like, look, we're not really not able to tell you that because we don't know either. I mean, but it sure sounds like an advantage to be able to do it. Okay.
It is an advantage being an LLC. And let me just throw out one thing. Do not become a C Corp. I mean, we've been doing this for over 20 years now. We have yet to see a case. There's double taxation. Again, won't spend 20 minutes describing it, but there's double taxation as C Corp. Never do that. If you do an S Corp, it can work out sometimes, but again, the advantage of the LLC is you can elect whether to be an S or an S Corp or a sole proprietor when you file your taxes. So it's kind of the best of both worlds.
Okay, let's see the next one here, number 4. What are some ways we can save on our taxes that would be less obvious than the general tax deductions for expenses and interest on our truck payments? I have no idea about that one. How about you, Michael? Or you know anything about that?
Yeah, it's what we do. So it's always a good question and a common one. So tough news is that I have to break to everybody is if you make a profit, you're going to pay taxes. So I just want to start with that. It's good to make a profit. It's good to owe taxes. You just want to plan for them. Like we're talking about preventative maintenance, you need to plan for taxes because they're coming. So there are some deductions that most people don't think about. Now, this could range from a brand new owner-operator to somebody who's been in the business, 10, 20 years. There's just stuff that people don't think about that is a business deduction. So a couple of those that we've come across are the small expenses. Folks oftentimes, even as small as an ATM fee, they charge you $1.25 or $2.50, whatever it is at the ATM to take some cash out. Hey, if you're taking that cash out for a business expense, that ATM fee is deductible. Might not seem like a lot, but it adds up over the year. You can also deduct small items like laundry while traveling, uniforms that may be required, tools you might purchase, hammers, screwdrivers, whatever you might be buying and storing there in the truck, toolboxes. All those small things add up. Those are all business deductions. To broaden that out a little bit, because I can't possibly capture every deduction in this conversation, is I'll give you the IRS definition. A lot of people think that the IRS is this mean, nasty organization that sets rules on everybody, but they actually leave a lot gray. They leave a lot of information out there where you are allowed to define the deduction. So IRS's definition of a deductible business expense is one that is ordinary and necessary. If you meet both those definitions of ordinary and necessary, it's a business deduction. So there's a lot that can apply there. I always keep in mind, and I hope this isn't taken the wrong way, but the saying goes, pigs get fat and hogs get slaughtered. Mm-hmm. Just don't be too greedy about it, and you're probably on the right track. Another item that I think about is the best strategy for taxation savings and keeping the money in your pocket. That's what I like to do personally. That's what I like to advise my clients to do, is deductions that keep money in your pocket. So I'm thinking of HSA, that's the health savings account. You can set some money aside for medical expenses in the future. That saves you on taxes just like paying for fuel or maintenance does. So you can put up to $7,100 a year in a family HSA. That $7,100 is yours, and you get a tax deduction for it. IRAs, traditional IRAs are deductible. You can put $6,000 in per person. Again, same story. That $6,000 is yours. You're saving for your retirement, and you're getting a tax deduction. 401ks and SEPs work the same way. Some other minor expenses that people don't think of right away. Home office deduction. You got $5 per square foot, maximum of 300 square feet. So that's $1,500 if you've got a home office that's 300 square feet. A lot of folks are using their personal vehicle for business, whether driving out to get new tires or pick up their truck or whatever it is. Those business miles are deductible this year. This is 2020 at 57.5 cents a mile. So you're getting half a dollar for every mile you drive. Only disclaimer there is commuting miles are not deductible. So if you're driving to and from the terminal or to and from your parking spot, don't count those miles, just any miles outside of those.
How about a guard dog, Michael?
Oh, yeah, guard dog's a great option. So The only one I've hesitated on is voice box was removed from the dog, so the dog couldn't bark. That'd be a hard sell for an IRS agent if the dog can't bark. But hey, maybe it can bite.
Yeah. Otherwise, if they can bark, then guard dog deductions and dog food and vet bills and the things that go along with it. One that always catches people by surprise, the deduction we take, Jeremy, is sunglasses. They're a safety device driving the truck, and we take a deduction for sunglasses because they are a required safety device in most cases. So, again, because this is all we do. Michael's not going to brag about himself, but we're the largest company in the country doing tax returns for owner operators. 100% of our focus is finding deductions or fighting the IRS for deductions for our owner-operator clients. We don't cheat. If our clients ever get audited, we provide full audit support for them. But we're aggressive with deductions as long as they're fair deductions. And like you probably just heard Michael mention a few things that most people don't think of. The last thing I would say to add to this is, this is free. If an owner-operator if somebody goes to our website, ATBS.com, we've got a button there called Knowledge Hub, and you can enter almost anything in the Knowledge Hub, and we'll have answers to it. One of the things you'll find on our Knowledge Hub is when you click on Knowledge Hub, you'll see an area that says Free Owner-Operator Trucker Tools, and if you click there, you will see a list of every. It's probably got 40 or 50 things on it that are deductible. It will show owner-operators the kinds of things they can be writing off that they may not be necessarily thinking of and saving receipts for. So that's important. And then one thing I would just say real quickly that points to the importance of this is that we arrogantly believe our clients are the most sophisticated owner-operators in the country. And yet, when we do tax returns every year, we don't. You go anywhere else for a tax return, you hand them your stuff and they give you back a tax return. We don't do it that way. We take every client and we estimate where we think they should be on every line item on that tax return. And if they fall outside of the range we think they should be, we go back to them and we say, you know what, your truck didn't get that good of fuel economy. We're missing fuel expenses. Or we think your truck incurred more maintenance. We're missing maintenance from, we think you're missing fuel from the fourth week of June, or we think you're missing maintenance from the second week of February, and we find those expenses and we take further deductions. And so again, we're analyzing any possible deduction our clients forgot to send us. We find when we do taxes at the end of the year, 92% of our clients every year, 92% of our clients, we found stuff they forgot to send us that we got it, and we took further deductions. So super important that whoever you're doing business with, for whoever's doing your taxes, make sure they specialize in owner-operators and they're finding those deductions.
Well, and I like the part of you also compare, I say that you compare that owner-operator with the rest of the owner-operators or what company they're with, right? So they get an idea of, hey,
exactly.
I'm doing a lot better than maybe the average is at ATBS clients are, and I'm doing better, and I'm at company so-and-so, so we must be doing things right.
Exactly.
All right, let's see, which this we just kind of talked about, but you can do this again. Where or how can we find a good transportation accountant in our home state? So tell us a little bit about that, you guys, because you kind of like to go to the accountant and look at the person and know that they're being honest and upfront with you and all that. So what would you say to an owner-operator worried about, I want somebody in my home state, when you guys are in Denver, Colorado, and you do taxes for everybody all over the country?
Boy, that's true. Like I said, we work with around 60,000 owner-operators in everything we do, and we're based in Colorado. When we started the business, it was kind of the same philosophy as we ran in our trucking company, where we've got teams. When somebody signs up for service with us, they're assigned, they are given a personal business consultant that is there from cradle to grave. So, and that business consultant works with a team of people. And so anybody on that team knows that client and what specifically is going on in their business life, their personal life, kids, spouses, other business income, everything going on. They're talking to the same person every time they call. They don't have to talk to somebody new every time they call us. And our philosophy when we started ATBS was, because we've looked at a bunch of different models. We looked at having people spread out throughout the country. We've looked at franchises. We looked at all of that. We decided to stay centrally located for a few reasons. One is a lot of drivers don't necessarily or didn't necessarily early on recognize how much it costs you to go sit down in an office, gather everything, and sit down in an office with a tax preparer to go through your stuff. And don't get me wrong, we have plenty of owner-operators that come through Colorado and visit us and stop by the office, meet with us, do tax work with us, and we're happy to do that anytime. But the majority of our clients like the convenience of not having to come and sit in an office and spend that time, because anytime you're sitting with an accountant or a tax person is either taking away from your personal quality of life, time off the road, time with family, friends, spouses, or what have you, or it's costing you money because you're not generating any income because you're sitting in an office instead. So 100% of our business is designed around a driver not having to take time out of their life to deal with managing the business. We're the back office. They drive the truck, generate money. When they're not driving the truck, they're enjoying quality of life with time off with family and friends. So, and I agree, there are going to be people that just want to sit down face to face with their accountant. And for those people, we can also play different roles. If they want to involve ATBS, we can do all their books, and they have somebody else do their tax returns. They can do their books themselves, a spouse or somebody do their books. We can do just their taxes. We're welcome. We're happy to do anything any client wants. If you're not using ATBS, just be hyper sensitive to the fact that whoever you're choosing to do business with is somebody who focuses on independent contractor truck drivers, not a whole bunch of people in a whole bunch of industries that doesn't have specific knowledge about trucking, because there's just too much money to be lost in not dealing with specific deductions and taxes for owner-operators. You know what? I'll give you one quick example of I think something that's critically important for how our drivers stay in business, and that comes to quarterly tax estimates. You know, a lot of owner-operators don't pay them, or what every accountant will tell you is to pay your estimates based on, they take what you did last year, they divide that by 4, that's your quarterly estimates this year, and then when you get to April and you file your tax return, whatever you were short, you have to pay that all in April, right, to make up the difference. Well, for most owner-operators, that's the kiss of death, because, you know, all of us overextend ourselves during the holidays. Then the first quarter is generally slower, and we don't generate a whole bunch of extra money. When you find out in April you owe $5,000 or $10,000 or $15,000 in taxes, you don't have it to pay, and at that point, you know, you're on the run. The IRS is after you, and you run from them, and it's the beginning of the end. It's a death spiral. The other way that the IRS allows you to pay quarterly estimates, and what we do for our clients, is when we do your estimates, it's based on what your business actually did that quarter. So if you had a slow first quarter and you don't have a lot of money to pay in estimates, that's fine, because you had a slow first quarter. The way we do it, you don't know a lot in estimates. We base your estimates on what you did each quarter. If you had a slow quarter, you don't know a lot in estimates. If you had a great quarter, you're going to know a lot in estimates, but that's okay, because you had a great quarter, you got a lot of money to pay in estimates. And so our method of matching of quarterly estimates based on what your business did that quarter, we're matching your cash flow to what you owe in estimates. So you don't, you know, it's not telling a client they owe the exact same amount every quarter and finding themselves in trouble when they don't have the money to pay it. Like I said, our method matches their cash flow to what they owe in estimates, and then when April rolls around, because they paid their estimates on what they did each quarter of the year, April's a non-event, because they paid based on what their business did. It's, you know, hopefully a few $100s of adjustment, not several $1,000s that they now owe the IRS in April. The other thing we talked about was depreciation, right? And matching depreciation specifically on what that individual client needs, instead of applying some general depreciation rule to every owner-operator that we do business with. Per diem is probably a good example, Mike. You want to touch on per diem?
Yeah, per diem is huge, and I just want to touch on something you said, because you said, Jeff, who you choose to do business with. And a lot of folks look at those credentials of CPA and they think they're good. And the CPAs, not all CPAs prepare taxes, not all CPAs are good CPAs. It means you passed the test. You know, so you can't always trust those credentials, and you need to make sure the person you're working with knows transportation. There are several areas of transportation that are specific to owner-operators. and they don't apply to anybody else. Realtors don't use it, retailers don't use it, Uber drivers don't use it, and so it's very specific. That's why we're successful with what we do. But per diem is a great example. Any accountant that works in transportation or claims to work in transportation should know the per diem rate off the top of their head. Currently, it's $66 a day. And the second thing they should know is that it's 80% deductible, not 50%. So many accountants deal with the 50% rule. They think that's the rule for everybody. And transportation is not the case. 80% is deductible. So that's a great example.
The other thing we find when we see other tax people's work is that when per diem does change, and it changes pretty frequently, when it does change, it never changes, on December 31st or January 1st. It changes in about the end of the third quarter typically. And so we change per diem rates when it changes. And so we'll do the first 9 months at one rate and the last 3 months at the new rate. Very few tax preparers will do that. Whatever the rate was at the beginning of the year, they're going to use that rate for the entire year. So if per diem goes up, they don't make that adjustment until the next year, which costs that client some money.
Well, it's just like anything else, Jeff and Michael, and I put it in common sense perspective. Get a professional that knows what they're doing to take care of those things that are in your life, like a mechanic. If you can't do mechanic work, don't try it, because you're going to break something that you got to fix something else, and it's going to cost you more. Take it to the mechanic that knows what he's doing, that you trust. If you do investments, don't try to do all those investments and make all the money. Try to get a professional to knows what he's doing, sitting there doing it every day. Taxes, don't try to, avoid paying taxes. You're not going to avoid paying taxes. If you're as long as you're making money, and like Michael said earlier in this conversation, is making money is a good thing. That means, paying taxes is good. That means you're making money. And that's what, but you got to get the right person to handle that money and know what's going on. And that's what you guys do, ATBS. So I think it's just a great service. And
one thing I just thought of, for those people who want to have a relationship with an existing tax person or accounting firm, or want to choose somebody local that they can sit across the desk from, one thing that we offer, and Michael will have to familiarize me on the price. I don't know it off the top of my head, but we'll review past year's returns. So if somebody has a question, whether their accounting or tax person is doing a good job, do you know the price, Michael?
Yeah, it's $75.
For $75, we'll review a return for somebody and let them know if we catch any glaring issues on that return. And if we do, and there are a bunch of problems in that return, which we find frequently when people have us do this, we can file amended returns and get that money back for them, right? So, in fact, a lot of times when somebody comes to us new, especially, if they're using the big firms, the Blocks, the Liberties, the Jackson Hewitts, people that don't specialize in owner-operators, even small firms that don't specialize in owner-operator and don't know all the deductions available, when they become ATBS clients, we'll review those past year's returns, and a lot of times we'll be able to file amended returns and get them money back that they overpaid in taxes. So like I said, if you've got, a lot of Oakley clients, what we love about Oakley is you've got low turnover, you're a great company, your drivers make a lot of money, as you see in our benchmarking statistics, our Oakley clients you're the top earners in the owner-operator industry. Very few owner-operators in the country make as much as Oakley owner-operators do. And because of that and your turnover so low, a lot of your drivers do have established relationships with CPAs, and we're not out here to try and change that. Of course, we'd love to have every one of your owner-operators as a client, but if they've got somebody and they're just wondering if they're doing a good job, for $75, like we said, we'll review a return, and if we see any glaring errors, we'll be happy to let you know. And if it looks like they're doing a great job, we'll tell you that too. And no reason to switch. They seem to be doing a good job for you. So just something to keep in mind.
Yeah, and we don't, we let owner-operators make up their own mind where they want to get their taxes done. We do have a relationship with you guys, ATBS, to where our owner-operators can sign up for your services and have it weekly deducted out of their settlement. And we actually send a copy of their settlement to you, and when they sign up. So that it's just a benefit that we offer, but we sure don't make them do it. They can do what they want to because they are independent contractors. But we're we're kind of geared like you guys are. I can tell the passion by talking to you two that you're there to help the guy make money and save money and do things right. I mean, we do things honest. We're an honest company just like you are, and we want them to do things honestly, but we want them to be successful. That's the whole part of this is for, independent contractors they seem to be going away instead of growing, and we want them to be very successful, and that's what our goal we have in mind is to do any way we can to offer them benefits to be successful, whether it's, fuel mileage savings or accounting services or advice or starting a podcast to communicate with them, just anything we can do to help them be successful. I was getting ready for this episode, talk to you guys, and one thing I want to say before we go, because we got to go, but I was looking at your website, and I'll tell you what I liked about it that I thought our any truck driver would like about it is you guys have a truck gallery where they can send in pictures of their trucks and you post it to the website. Is that how does that work?
Yeah, we love it. We're proud of our clients. We're proud of. We love trucking. We love owner-operators, and we're proud of our client base. And so, pictures, stories. Another resource, we've got our website, and then we also, for Freightliner Corporation, whether you drive a Freightliner or not, we run a program called Team Run Smart. And if you go to teamrunsmart.com, there's also a lot of resources there. That's all our content. A lot of awesome resources from what we call the pros. We've got a handful of drivers we give trucks to, and they drive and blog about the business of trucking. All those resources out there. Yeah, we love the pictures. We get everything from truck pictures to scenery pictures. One of my favorite stories when we owned our trucking company, I'll tell it quick. I know we're out of time, but we had a driver, Brian Pollard. I remember him. I can see his face. An awesome guy, and I was looking at his resume. He's driving a truck, and I was looking at the application resume he sent in, and he was a radiologist, a doctor. And so I called my office and I said, Brian, what in the world are you doing driving a truck? You're a doctor. You're a radiologist. You could be making $1 gazillion, working in a hospital environment. And he said, I was the first kid in my family to go to college. It was important to my mom that I went to college, and it was important to my mom that I became a doctor. So I became a doctor, but since I've been a little kid, my passion is trucks and truck driving. And so as soon as I did that for my mom and proved I could do it, I quit being a radiologist and started driving a truck. And one of the things that the reason that came to mind, Jeremy, is your story about the pictures. One of the things he did in the first 6 years of driving for us, everywhere he went around the country, he loved birds, and so he would take pictures of birds, in different wildlife refuges at parks as he was traveling the country. And he published a book on raptors after his first 6 years of driving for us. A really awesome book on birds he'd seen around the country. So that's why we love truck drivers. We've got a engineering professor from Ohio State University that drives a truck that's a client of ours. We love truck drivers, and that's why we do what we do.
Well, y'all do a good job, and I sure appreciate y'all taking time to visit with us. We've talked with Jeff Amon and Michael Schneider of ATBS, and we've had some good conversations, ask a lot of good questions, and y'all have got some great answers for them. I know they can check you out at atbs.com and call you if they got any questions on anything. And I appreciate you guys hanging with me today, and I especially appreciate our owner-operators. Oakley owner-operators are the best in the business, and enjoy you guys every day. Y'all make me proud to be with Oakley, and I appreciate you making me a living too. Sounds good. You guys got anything to add?
I think we're good, man. We just really appreciate the opportunity to be on with you. We can talk offline later, but happy to do. Submit questions and we provide answers, kind of thing. And I always worry, as you said, I get super passionate about who we are and what we do, and so a lot of times I can come across as being salesy. I want to make sure everybody knows we don't even have a sales team per se here. Everything we do is word of mouth and no long-term contract. We do what we do because we love to do it. Any client we can help, we'd love to. But even if you're not a client, you've got problems or you need help, just reach out to us, and if we can help, we will.
Good enough. All right. Thanks for listening to Oakley Podcast, and we'll see you guys next week. Thanks for listening to this episode of the Oakley Podcast, Trucking, Business, and Family. If you enjoyed this episode, be sure to rate or review the show in the podcast platform of your choice and share it with a friend. We love hearing from our audience, so if you've got a question, comment, or just want to say hello, head over to our website, theoakleypodcast.com, and click the Leave a Comment button. We'll get you a response soon and may even share some of the best ones here on the show. We'll be back with a fresh episode very soon. Thanks for listening.